Hello and welcome. My name is Chris Cann, Head of Mining Journal Research, and with me I have Jamie Strauss, who is founder and CEO of Digbee, a mining data research and ESG disclosure platform. Hi Jamie, how are you?
Morning Chris, good to see you again.
In years gone by, the idea of independent research has been lost somewhere in between fee-seeking broker notes and commissioned research. My understanding is that Digbee has taken a different view on providing independent research. What is the view? What does it look like?
Well, I think you've kind of characterized it quite well there. And as one fund manager said to me, is Digbee fills the void in mining research, which has been there for so long at a price point that people can connect to. And what I think he was really referring to is that we really needed to do better at mitigating risk in the mining industry. And we needed genuinely objective analysis of the key core risk disciplines of geology, metallurgy, and engineering. And if you can get that simply in plain language, available to anybody to read and understand, to come out with complete conviction with where you stand on that project, then I think we've not only filled that gap, but we've made massive strides in this industry to try and improve the confidence and trust of the industry as a whole for investment.
Okay, and so how does it actually work in terms of providing the research? If it's independent, who's actually providing this research for you across those disciplines? Because obviously mining is fairly unique in that it brings in so many technical and financial disciplines. It is tough to actually get balanced research and independent research. How do you provide it?
Yeah, and so we turned it on its head, and what we did is we took the view that there are thousands of independent experts out there, called mining professionals, geologists, metallurgists, and engineers, and others, ESG consultants or whatever. And what we did is we really took the assumption that they're not integrating very well with the financial industry. The private equity groups have their own relationships with the core consultants groups, but the rest of the investment world, the family offices, the institutional directors, the institutional investment houses, and even private individuals don't have access to these people. It's very difficult to gain access to the right person at the right time, to get the right results at the right speed at the right cost. So okay. What we did is we took that upside down and we created the world's first ever mining professional expert network. And okay. So, and out of that expert network, which has now been live for a year and a half, we have around about 400 experts on that platform, of which a part of that are accredited. So they have to be accredited within their own profession. And once we've proven that, then they are proven they're approved to write on the Digbee platform. And so their incentive is to get 50% of the sales of any of the research that is sold, and to get a greater profile, digital profile or internet profile through the Digbee site, as we do change the culture and improve or fill the gap of research and get more people using this. And I think what's really important is that we're working on something which is a high quality piece of research. And what do I mean by that? So first of all, every single author is accredited in his own business, and we double check that. Secondly, there is a natural selection of the author relative to the project. So there's no point in having an IOCG geologist writing about a porphyry. You want the porphyry guy writing about the porphyry. Then there is the SWOT analysis, and the summaries obviously that go with it. But most importantly, the conclusion of these reports comes down to a standardized set of questions, which are 3 for engineering and geology, 4 for metallurgy, which relates on a consequence versus likelihood table, and you get a standardized score that comes out of that. So a generalist fund manager can compare and contrast any project to a relevant other project. So a gold porphyry to another gold porphyry, wherever they happen to be in the world. And those scores are then obviously available through the report.
Okay, so their role is to provide independent research as accredited analysts, experts in their field, and that builds the Digbee platform, which is accessed by institutional, retail investors, corporates, everyone.
Yeah, and it's very much, it's ad hoc. So I mean, all you have to do is sign up. It's free. You get a free database of over 4,000 economic studies going back since 2003, covering over 1,400 different projects. That's free for everybody to do. There's no subscription price, but if you then want the research, then you pay for the research. And I think it's important just to stress at this point that the research is standardized. So the structures, the templates have been put in place. We work with the experts very closely to make sure that they've got the guidance as to effectively writing. And there's a real strong element of quality control, Chris, on this. So not only have you got the accredited expert function, but you've also got the natural matching of the right person for the right project. So there's no point in having a IOCG geologist doing a porphyry deposit. You want to get the porphyry guy. So we band each of these experts into 3 different groups based on purely their experience. So 0 to 10 years, 10 to 20 years, and 20 years above. Band 3 is the 20 years above, which is the area we've been mainly focusing on now because the market's not developed enough yet. And then from that, they write the report. We then have an internal peer review on it, very much their report, but we'd have a very much an internal peer review to ensure that we've covered all the relevant points and to ensure that they're obviously being written professionally. And then lastly, there's a Uber type rating whereby the buyer of the report will then give an anonymous 0 out of 10 rating based on the objectivity of that report and how it was understood. So there's a number of different areas to ensure quality control is absolutely at its highest.
Okay, and goes without saying, I think there was something last check about 2,000 odd different equities out there, all with one or multiple projects. You've got a limited number of accredited experts out there at any one time, and the reports sound like there's a lot of quality control. They're big reports, they're in-depth reports. You have to prioritize them, I assume, somehow. How are you picking which projects you actually cover and you bring into the database?
I think that's great. I mean, with a platform, really what happens with platforms is the most popular things come to the surface. Okay. So it's a bit of a natural evolvement. We are helping the experts at the moment choose a few projects just because the whole platform is new. But ultimately, the most topical projects reach the top of the pile. So if you look at the 28 reports that we've done, some of which have been multiple studies, so geology and metallurgy or geology and engineering, but we've done about 28 reports so far, and it covers largely Canadian companies because 43101 is available to everyone. Where we can do other companies, then we will do, and where a client of ours has particularly requested a report to be done anonymously, we will obviously then encourage an expert to do so. It's in their interest, it's in our clients' interests, and it's in the market interest as a whole. The core difference, I suppose, from a sales perspective, as opposed to the consultants, is this is multi-client basis. So the report goes up onto the site and it's available for anybody to download, as opposed to a single report done for a single client. And that's how we're able to reduce the cost to make it more amenable to a much, much larger audience. So the average cost is around about $3,500 US dollars.
Okay, and if I can just drag you back to when you started Digbee and why you actually started, I probably should have started there in the beginning, logically. Looking at where the research sat in terms of that kind of broker or commissioned research model for the industry that was in existence for a long time, there's also now the technology advancements that allow these platforms. How did it actually take shape? What actually drove the decision to start Digbee for you?
Yeah, that's a great question. 5 years is a long time in a business like this, and we're really excited. 2020 has just been such an amazing year with all the different things that have gone on. But if you do go back that 5 years and where it was, I've spent 30 years in the mining finance world, so I knew where this industry was going wrong consistently. And there's enough studies out there for anybody to work out the statistics. I think McKinsey's is the best one. I think 80% of all mines come in over budget and beyond time. And I think on average, over 40% beyond budget. So that's not a good statistic for this industry. And it doesn't matter if you're the top of the bull market or the bottom of the bear market, as we were in 2015, 2016. We needed to change, and we needed to get this industry into a position whereby it attracted new investment and it attracted new pools of capital. If you take 2020 with its ESG hat on, we know this industry can deliver and help this world move to a sustainable future. We know the generalist investors as well as specialist investors want to invest more money in this industry, but they're scared of this industry because of the history, which is not of the writing by any of us, it's a fact. And that fact has been around for too long, and we needed to address that. But addressing it wasn't as difficult as it seems, actually, because it comes down to mitigation of risk, whether it's by the corporate in terms of executing that business, rather than promoting it as aggressively as you can in order to maximize your NPV or IRRs and returning cash, but actually delivering. We know that if we deliver a project on time and on budget, you'll get ultimately a better rating in the medium to longer term. The investors know that, the corporates ultimately know that. So if we can get the corporates to mitigate risk earlier in the process, and at the same time give the same functionality to an investor, and the private equity guys are doing that. They do their due diligence. They do go and use consultants and spend huge amounts of money on this. So let's make it more available to the institutions who wouldn't otherwise be able to purchase that, either through time, because normally these things take months to get done, or through cost. So that was the reasoning behind it. And I genuinely believe that once we can get this used on a more frequent basis, it will help the corporates who are owners of the projects and therefore need to challenge the consultants who are working for them to make sure that they do mitigate risk, at the same time as giving the investors a wider eyesight as to where the issues are, but also where the opportunities are, and therefore be able to value their risk in a far better way than they've been able to do so in the past.
Okay, I mean, one of the points there that jumped out at me was opening up the mining industry to more generalist investors. I mean, obviously from an industry perspective, that's something that we need. A lot of the traditional funding avenues for miners have been closed off or limited for quite a period. What's the reception been like so far? I know that you're still, although 5 years in development, fairly early stage. What's the reception been from the specialists, and then also from that broader pool of generalists?
Yeah, I mean, we did a lot of market engagement before we launched. So we had tested the structures of the templates of these reports, and so we had a fair amount of confidence going into 2020 with what was required and what was needed. The feedback has been almost unanimous. I mean, we do have to constrain ourselves with publicly available information. So that restricts the market to some extent. At the moment, we can't do the Australian companies because they don't fully publish their studies. We hope over time, and with showing the benefits of where the Canadian companies are getting with this genuinely independent research, which is not paid for, commissioned by the companies themselves, how that can benefit even the smallest project in the world. So with that in hand, the feedback has been excellent based on the companies and the reports we've done so far. I think, as I said earlier in the interview, one global fund manager said to me, "This fills the gap, fills the void of research that has been out there for so long at a price point that we can relate to." To me, that kind of naturally states exactly where this product ultimately can go to. From the specialist point of view, we've had really good sales from the specialists, and I guess some people would say that's rather surprising, but if you look at the specialists, no single fund manager has all 3 or 4 different types of geologists, a metallurgist and an engineer. We all know that fund managers need to improve their due diligence to some degree or another because of compliance or for risk mitigation or for whatever reason. And therefore, how could they, what is the better way to effectively do that by buying a $3,500 report, which comes from a direct expert for that project, for that discipline, within a timeline that they could get. So I hope that answers the question. But the feedback's been excellent. And I should also add, it's not just those investors, it's also the corporates. We had one report out, which was bought by one of the companies. They get a 25% discount if it's on their project. And the feedback, or the actual report was not entirely complimentary, but the CEO, who is a geologist, came back to me and said, I can't use that for marketing, but we completely agree with your analysis. And what's more, we're going to use that analysis to move our next study to further mitigate risk. To me, that answers and supports everything we're trying to do for the investor, for the corporate, and for the market as a whole.
Okay, I imagine the ESG angle that you guys are covering, the work you're doing in that part of the research, is when you look at issues that you mentioned, like compliance, like de-risking. That's a huge thing for both specialists, but very much for generalists. How has that been received? I'm expecting you to say very well.
Well, I could spend the next 2 hours talking about the ESG product. I mean, it wasn't driven by me, it was driven by the market. We were encouraged earlier this year by some of the leading institutional names in mining to come up with a solution for the junior mining industry with regards to ESG. I didn't know what that related to at the time, but through my own experience of being on a number of different boards, it wasn't very difficult to work out what the underlying problem was. And we are going to be delivering in December a set of frameworks that are right-sized for the junior mining industry, that respects all the big initiatives of some of the bigger groups, IFC, ICMM, Equator Principles, etc., GRI and everything. It respects those, and it's an easy to use framework which encourages engagement and embracement of ESG for the junior miners, who we know not only want to be seen as a good citizen, but also now need to be showing themselves as a good citizen, otherwise they're not going to get financed. So we were encouraged by the market to do this. We've delivered that. We're very grateful for a number of different groups who are going to become partners of ours to have got us to where we are and to test the frameworks. And I'm excited that this is really going to kind of change the industry for the better in so many ways. And there's a lot of synergy with the research, to the extent that all of this is risk mitigation. You can see ESG, we now know there's enough evidence to suggest that a high scored ESG company has a lower empirical risk. In the same way, our research product very much allows people to simply and easily identify risk and be able to value risk in a much easier way than they would have been before.
Okay, and let's have a look, if it's all right, at some of the research that's being done. Specifically, one we've picked up was Battle North Bateman project. Can you talk us through how that was put together, what you found, just to give us a practical idea of how this works?
Yeah, I think this is a really topical project. So Battle North used to be called Phoenix and was owned by a company previously called Rubicon. And it had a pretty horrendous history. It I suppose was the poster boy of what not to do, and it came into production. I think it was 2015 on the back of a PEA. And the bottom line is that having gone through the problems of that, the question which was then raised when we encouraged an expert to start to write on this was, is the geological model that they have now come up with robust, and are we they're obviously moving into a further study, Bateman, later this year, early next year, but is this new geological study robust? And that is the key question, whether or not it's the private equity guys or the debt bankers or whoever it is and all of that need to understand and gain in confidence before they decide to sign their checks. So I think you're talking to Luke, so I won't steal his thunder, who wrote it. But I think that was the core question, and I think he very aptly concluded in his report where that sits.
Okay, we have got Luke English on the line. Luke, what surprised you in the due diligence process, and what can readers gain from the research that you wouldn't see if you were sifting through the usual documents that have been published?
All right, the Bateman project's an interesting project because in 2013 they put out a resource, and in 2015 they did some trial mining to test the resource and got disappointing results. They got lower grade than was expected. So so they got a bit of an egg on their face for that. So this latest resource and mining study was a complete rethink, and I was looking at it to see if they'd done the correct thing, whether they'd done a better geological model, or whether they had tried to fudge the statistics and suppress the grade to be the same as the mining results. My findings were, I think they did a much better geological model. I think they oversimplified it the first time. They thought it was a simple continuous thickness mineralization with the fault offsets, but this time they applied better geology. They treated it as a ductile, brittle mineralization, which it should be in a thin greenstone belt, and they modeled it as smeared out pods of high grade mineralization, which seemed to work when they did another mining test a couple of years later. They also took a conservative approach, and they had, I think, a lower than they should have done top cut. The model was conservative but pretty good, and the bulk densities in places they used a lower value than was probably real. So they might get some upside when they actually mine. The issue that comes up with the new geological model is that the high-grade mineralization is in isolated, discrete pods. And so there's a lot of tunneling in order to get to the isolated pods. So you've got to look carefully at the mining costs and that they're correct. Otherwise you might have problems. And of course, there may be instances where they'll go to an isolated pod that's being defined by 3 or 4 drill holes, and there's always variability in the drilling results and the actual results. It's a small sample, and they might find that some of these pods are not as rich as they were expected to be, and others should be better than expected.
Thanks, Luke. Jamie, another project which has been turning a lot of heads is Fresnillo and Mag Silver's Juanacipio project. It's a significant silver deposit. It's backed by groups like BlackRock and Sprott and Fidelity, which gives it an immediate stamp of approval. The research Digbee produced here was based on just the rocks, just on the geologies. Can you give us a bit of an idea about this, or have you got someone who can give us a bit of an idea about this?
Yeah, so I think you're going to interview Chris Bateman, who wrote it and did an outstanding report, along with an engineering report written by Christian Siebert. Now, this is an exciting project. There's no doubt about that. The question is, are they going to get into production and meet the expectations with which they have set the market when they get into production? So they will get into production in 2020, but will they meet expectations through their initial mining process? Or will that come to bite them in the backside again as a result of going in under a PEA? And I think both the geology and the engineering reports definitely open the light to that.
Okay, and we've got Chris Bateman, I believe, who wrote the report.
For the Juanacipio report, the base document was the 2017 PEA. The project itself is an exploration success. It's a geological concept that was taken through to a mineral resource. The concept was to find deeper level mineralization below altered outcrop on surface. Based on the geological aspects presented in the PEA, the project does run a real risk of negative grade variations from the resource estimate when mining commences. And there's a lot of detail for that available in the Digbee report. In April 2019, the JV partners, that's Fresnillo and Mag Silver, made the decision to proceed with the development of the Juanacipio project. Moving from a PEA straight to a production decision is quite a brave one, and it's a high-risk strategy. And particularly in the case of Juanacipio, where the resources are at indicated and inferred level. So there's no measured resources and there's no mineral reserves. This can be mitigated by Fresnillo's knowledge and experience of operating the adjacent silver mines in the Fresnillo district. Interestingly, the current exploration strategy is to focus on testing the depth extensions and the satellite veins rather than on increasing the confidence levels of the initial material that will be mined. Now that's quite a high risk strategy. It's a brave strategy, and the Digbee report discusses the contradictory approaches that are currently being taken on Juanacipio in an objective manner that should hopefully provide some really useful insights to potential investors.
Okay, thanks, Chris. Jamie, one of the companies that I'm particularly interested in, and like you said, a lot of these reports are generated by interest in the market, looking at Solgold and the viability of the project. Everyone's read different things, the technical complications, the incredible geology there in terms of the size and the grades. Very interested to understand what Digbee made of the viability of that project. Fantastic rocks. Can they get it out of the ground?
Yeah, I completely agree, Chris. I think it was a very misunderstood company from my own perspective of 30 years in the industry. I'd almost kind of passed over it, and then I encouraged a couple of experts to get involved. And in a way, you've kind of summed it up. The geology is very exciting, and Mark Osterberg, who wrote the report on the geology side, did a great job. But in a way, it was a rather boring report because it didn't highlight any major negatives. And I think the company should be complimented for that. I mean, it is pretty much this. There hasn't been geotech work, etc., on the asset yet. It's only at PEA level. They're moving to PFS next year. But what really came out was the metallurgy report, and there just simply isn't the access to metallurgists for an average generalist fund manager in order to get to the bottom of metallurgy. Metallurgy is so important in a deposit like this. So what came out of this, Jim Fisher, who was the metallurgist who wrote on this, I thought did an outstanding job, and then supplemented that once the company came out with a MET update earlier this year, then upgraded or improved updated his study. And I think the core for this was that he highlighted in his first study the fact that the algorithm that they were using for recoveries was overreading relative to the test work. Now, how many generalists would have identified that? Now, what I would go on and say, and I'm giving rather a lot away, but the report has a lot more to say, is he then reduced his risk ratings, and Digbee has these specific scores which relate to standardized questions in each discipline. And Jim then reduced his risks as a result of the activities they had done to further improve the confidence and reduce that problem between the algorithm and the test work. So we proved that the Digbee reports were picking up the relevant issues of risk, which ultimately need and hopefully are mitigated over the course of the studies to ultimately lead to then a decision to build and hopefully meet expectations and meet budget.
Okay, and I know we are getting a little short on time, but I did want to look at one more example, one more report, and that is of the company Pensana Rare Earths. The report that let me read the tagline on the report. Is Longonjo worthy of international attention? So obviously, Jamie, the question is it worthy of international attention?
Well, I don't want to give too much away from this. I mean, rare earths is renowned to be a very difficult industry. Metallurgy is obviously an important issue for that as well. Although I think it is fair to say with this asset, it is shallow. It's got a substantial resource. The license has been granted. It's got international backing from Chinese groups. But you need to get into the weeds here to really understand the viability of economics. And there are a number of different issues here which I don't think I would have necessarily identified. I'm not a geologist myself or anything without having read this report, which I think certainly requires mitigation in order to increase the confidence from the level which certainly Edmund Sides, an ex-Rio Tinto geologist, has come up with. He's also written a really interesting, totally free on our Content Hub, description of rare earths on the Digbee Hub if people want to understand rare earths a bit more. But I think you've got to ask yourself, they didn't declare any reserves at a PFS. Now that is not illegal, but it's unusual. So why didn't they publish some reserves when they published their PFS? To me, that's odd.
Okay. And I assume you're not going to tell us, you're not going to give us the answers.
There's a report available, Chris.
Okay, fair enough. Jamie, before I let you go, what else is happening with the platform? It's moved a long way in 5 years. The ESG platform, obviously, the disclosure platform, the ESG disclosure function is something new that you've talked about a bit. Can you give us a bit more color on where that's going? And then anything else that we should be keeping an eye out for with Digbee in general in terms of its evolution?
Okay, so let me come to the second part of the question first. So with regards to the research, we really want to encourage the experts to write reports on here and bring that huge community to bear on this industry to effectively address the goals that we had, which is to mitigate risk to a much wider audience. So we're going to make a big marketing push and everything the back end of this year and into next year to really support that. And I think that's really exciting for the expert community, which generally, except at the peak of a bull market, are generally left out in the cold. It's not an easy industry for them to work in. So we want to incorporate more of the community onto the Digbee platform. So the scoring system with regards to the reports, the Uber rating, as I call it, I think will really add tremendous value to the industry as a whole. There's a number of other elements that we've got on the research side, which will kind of iterations, so to speak, of where we are. We incorporated, we brought out a new mine plan report, which incorporates geology, metallurgy, and engineering on the Pretium Brucejack asset earlier this year, which got strong acclamation actually, and really nailed in on an asset that had disappointed many people in terms of its new production, but what wonderful grades and with a new management team on board. So we're excited to do that, and there's a number of other different initiatives that we want to bring out to further enhance this whole angle of risk mitigation and improvement of bringing in this business or this industry closer together with the experts, etc.
Okay.
With regards to ESG, in December, we will launch the platform. Corporates can have a profile on Digbee. They can get access to the frameworks. They can be independently scored. They can publish, the score will then be published, but they will be able to have a 13-month delay of their inaugural score so that they can get a second score 12 months later to allow a direction of travel, so to speak. They're very much frameworks to help the industry move into ESG and get approved or accredited, so to speak, by the financial organizations so that they can open doors for finance, so they can prove themselves as good citizens they can show that they are improving. And hopefully, and I really believe this, if we can do this, the industry will attract so much more new capital. I've spoken to a number of big ESG fund managers who have never invested in mining before, but they understand and they agree that the transition to a sustainable future is dependent on the mining industry. And therefore they need to include mining, but they need to increase confidence and they need to include trust in our industry, which has been lacking for so long.
Jamie, Strauss, thanks very much for your time.
Thank you very much, Chris.